Welcome back to Good Day Orlando. On the Consumer Corner, retirement should be a time of freedom from deadlines and to-dos, but you likely won't be tax-free. Certified financial planner Gary Abely joining us this morning to explain the 4 tax-efficient strategies in retirement. Gary, good morning. Good to see you.
Good morning, Andrea.
So let's get started. We want to save the most when it comes to our retirement, especially when we're taking money out to enjoy those golden years. You say the first thing, consider the basic retirement withdrawal sequence.
That's right. So when you are 70 and a half, for example, you have to take money out of your retirement accounts. These are called required minimum distributions. And that's where you want to start, because if you don't take what's required, you actually have a 50% tax penalty.
Wow.
Exactly. So it's a huge thing. That's always number one. Now, of course, if you're less than 70 and a half, you don't have to take money from your retirement accounts. But the most important thing for our listeners is managing their tax bracket in retirement, and that really takes a lot of work. I can sometimes spend an hour or two working with different tax circumstances with a client. Maybe they've sold some stocks and they have a capital gain we need to worry about. Maybe they have a part-time job. Maybe they're taking Social Security. All of these things have to be factored. For example, we often try to get a client earning 5 or 6% in retirement on their investments. But if we can move them, for example, from the 25% tax bracket, maybe down to the 15% bracket, or maybe 10, by doing some tax planning, we've effectively tripled or quadrupled their return.
And they're not having to work part-time to make up for that extra money, right?
That's right. And so it starts with planning. We want to make sure people are budgeting things such as a new car purchase. We might be retired for 30 years. You might have somewhere between 3 to 6 new cars. If you take that lump sum out of retirement account, it could bump you up into a new bracket. Other things people don't think about, they might need a new roof, might need 2 new roofs, they might need new air conditioning units. So those are all things we recommend people budget monthly, so that you don't have this huge withdrawal bumping you into another higher tax bracket.
Yeah, because we are living much longer now and retiring at a somewhat earlier age. So I think these are things that are easy to forget, that you may have 2 or 3 cars between retirement and your final days.
That's right. And another thing, some folks are very surprised. They've paid Social Security taxes all their life, and then they retire and they find out, oops, up to 85% of my benefits could actually be taxable. And again, this is a planning process. It's complicated. You look at what's called provisional income, and I won't go into the details and bore everybody, but it's very important to sit down with a financial advisor with keen tax knowledge, or sit down with your CPA to do the planning, because if we can avoid taxes on the Social Security, then we're not taking that 20% hit.
And again, that's extra income for
Absolutely.
you in retirement. You also say, the last one on your list, exploit lower capital gains rates.
Well, that's right. So every November, December, we want our clients to look at what they have in terms of unrealized gains or losses, because if they have a position where they have a long-term capital gain, something held for a year or more, and they're in the 15% tax bracket or lower, I likely will suggest to that client, sell that security, because you pay 0 income tax on it. A lot of people don't realize, but the long-term capital gains rate for people in the 15% bracket or lower, whether retired or not, is actually 0. So we want to take advantage of that.
That's motivation.
Absolutely.
Definitely. Gary, great advice. Where can people find you?
They can find us at financialgroup.com.
Okay, very good. We like to invest in the weather here in Central Florida,
It's beautiful.
too. It is
Yes,
beautiful.
It is.